All right, traders, welcome back to another Dogecoin video. I know it's been a while since my last upload, probably about 5 days since I last uploaded. You're going to have to forgive me for that one. I had some things happening outside of my YouTube life, right? And I may not be the best uploader in the next week or so, but don't worry, we will eventually get back much stronger, as always, right? We always kind of sort of hit some bumps in the road and then come back much stronger. So, whatever. Let's get into the video. So, Dogecoin. All right. So much has happened since the last video. In the last video, we spoke about Dogecoin being in the historical bounce zone and actually holding up that historical bounce zone, which we love to see. Okay. And for you guys who are annoyed about the Dogecoin videos, yes, we are going to eventually obviously cover more than just Dogecoin. It's just that Dogecoin is what's really hot right now. And as a influencer, it's my job to cover what people want to see. But we will be doing much more. We will still be making Dogecoin videos. And then on top of the Dogecoin videos, we're going to be making a lot more content. All right. So look forward to that. So we were speaking about Dogecoin being in the historical bounce zone. We saw a massive lower wick right there, right? We had lots of buying coming in, as you can see from the volume. We also spoke about how RSI went oversold for the first time in a while, and that was actually a pretty big sign because the last time RSI went oversold on Dogecoin, at least on the 4-hour time frame, it was down here, which was pretty much the bottom of this move right here before the next pump, right? We had this consolidation phase on Dogecoin for a while back in March, okay? And then obviously we had that massive run up right after. So you can see right in here, again, Dogecoin went oversold along with that major historical bounce zone test. If you don't know what the historical bounce zone represents, it just represents a 61.8 to 786 Fibonacci retracement, which looks something like that, right? From the most recent low to the most recent high. And the historical bounce zone is the 61.8 to the 786. You can see we actually bounced off the 886, right? That's pretty much the bottom of Dogecoin, was that 886 Fibonacci level. Okay, and the reason why that's the historical bounce zone, again, we cover this every video, but just for the new viewers, the reason why that is the historical bounce zone is because almost every single time Dogecoin bottoms out, with these pumps, okay, you can see how Dogecoin has this pattern where it pumps, dumps, pumps, dumps, pumps, dumps, pumps, dumps, pumps, dumps. Pretty much every single time it bottoms out on these dumps, it's around a 61.8 to 786 Fibonacci retracement. So all we did is just kind of use the past to tell us what the future may hold. So since our last video, we retested that historical bounce zone, the bottom of the historical bounce zone, which was right around 28 cents. Okay, and again, interestingly enough, you can see we had a lot of buying coming in, and we never closed below that historical bounce zone. Sorry, I might be a little sick here. I just got the second dose of the vaccine, so maybe some symptoms going on. But so you can see we had massive buying coming in. Again, we never closed below. We were saying in the last video how we do not want to see a close below that bottom level of the historical bounce zone. So basically, we don't want to see a close below around 28 cents. If we start trading in the 27 cent area, that would be a major bad sign for Dogecoin because it's never done that in the past. It's never closed below the 786 Fibonacci retracement of the most recent pump higher. So as you can already see, right, after that, we now have created this sort of consolidation pattern, and Dogecoin really loves to create these consolidation patterns, whether they're for the better or for the worst, right? Whether it's a bullish or bearish pattern, Dogecoin tends to respect these breakouts pretty well, other than recently, because obviously some major catalysts have come out, like Elon Musk tweeting against cryptocurrencies. Now, of course, he is trying to tweet some positive things to pump price back up. I'm sure he owns a lot of crypto and is, kind of using his power however he wants to, and we just kind of have to deal with it. All right. So we have this historical bounce, or we have this consolidation pattern that is now forming in the historical bounce zone, which is pretty interesting. So what I wanted to do is go back to other historical bounce zones and see if there were consolidation patterns that we could compare this to, and there actually kind of was. Okay, we're going back now to January of this year, And you can see Dogecoin created this little consolidation pattern before moving higher. Okay, now obviously after that we had a massive consolidation. You can't really count that as a pattern, but if you really wanted to, I'm sure on a bigger time frame like the daily time frame, if we go back to that, okay, we can see that somewhat of a consolidation pattern. Really not much going on there, but you can see we broke out from that consolidation pattern on the next pump. Okay, and we can go back again, 4-hour time frame. Okay, so that's that consolidation pattern. Here's another pump back in January, and you can see we had this consolidation and then a break higher to the next pump. Go back now to today, and you can see we have a historical bounce zone and we have a consolidation pattern. So this is huge news for Dogecoin, because if we break out of this consolidation pattern, we may see the start of the next pump. Now, obviously, I'm not stupid, and I know that Dogecoin pretty much relies on hype for the most part. So we kind of need a combination of both a resurgence of Dogecoin hype along with a breakout to the upside. Who knows, maybe if Dogecoin can break out and we see some technical traders push this a little bit higher, that may resurge that sort of hype, and maybe Elon Musk will tweet about it. We're in an interesting age of trading where Elon Musk tweets can really move markets, and as stupid as it sounds, you have to accommodate for Elon Musk's tweets when you are making these decisions. So the level that we want to see Dogecoin break is going to be right around 37 cents. Basically, what we want to see from Dogecoin is a close above this historical bounce zone again, okay? Because that would be a breakout of this consolidation pattern and also a breakout from the historical bounce zone. And we know that usually when we have a breakout of that historical bounce zone, if we see lots of volume coming in, we start seeing bullish candles come in, we can see a pretty quick move to the upside happen, okay? We've seen it multiple times. Right in here, okay? And as far back as here and somewhat here, okay? So that is what we want to see from Dogecoin. Now, on the other side, on the other hand, if Dogecoin starts to retest the lower end of this historical bounce zone, that probably is not a good sign, because like we always talk about, these levels can only hold for so long, just like when you bounce a ball on the floor. Eventually, the ball loses its momentum after it touches the floor too many times, and in this case, it would fall through the floor. Okay, so what I'm saying is if we retest around 28 cents for a third time, because we've tested it 2 times, if we retest it a third time, then that may be a bad sign. It may be a sign of weakness for Dogecoin, and I have a feeling that we might start blowing through the lower end of this consolidation pattern, and from there, it would probably be a straight shot down to around 20 cents. Okay, so that is not what we want to see. So be aware if you are trading Dogecoin, be aware of those two important levels. We want to see above 38. We do not want to see below 28. Okay, so also we'll see that this is a bullish sign. We'll see that RSI retested that oversold zone, right? That oversold level, which is the 30 on the RSI. And we also created new highs on the RSI as well, right? We kind of broke through this downtrend on the RSI, create that new high on the RSI indicator, okay? And hopefully we can see a higher high on that RSI. I've said RSI a lot, and we want to see a break of that midpoint level right around 50. Okay, so you can see how we retested that 50 level, and we weren't quite able to break through it. So what we want to see is this RSI go above 50 and stay above 50, because that is the sign of an uptrend. If you haven't watched my video on RSI, I don't know if I can plug it in this video, but it's the most popular video on the channel, the secrets to RSI. That 50 level is a major key level, because as long as we're above it, we're in an uptrend. As long as we're below it, we're in a downtrend. So lots of things coming up for Dogecoin here, lots of important factors that we want to watch. I want to see it break 38. I want to see RSI above 50. And if we can do that, then it is a pretty good chance that we're going to start again another pump higher, hopefully towards that 70 cent level. And if we can break that 70 cent level, I'm telling you, it's pretty much straight to $1 from there. So that's pretty much it for this video. Hopefully you guys enjoyed. Excuse me. As always, if you guys want to check out the links in the description down below, want to get 2 free stocks with Webull if you open an account with them, and if you want to join our free Discord, links in the description down below. And I forgot to even say this in the beginning of the video, smash that like button if you enjoyed the video, and subscribe so you never miss another post just like this one. That being said, I'll see you guys in the next video. Peace.